Here's our weekly update of our option trades for the week and our option income, mostly from cash secured puts and cover calls. Actually, it's all from cash secured puts and cover calls. I have bought some leaps, but typically I stick to these two things here because they serve me well, and why not, So I think I might have to change my picture here that I got of a SoFi ATM. I don't know if there are ATMs that say SoFi on it or not, but it's spitting out all this money, all this premium, and I'm happy and I can't hardly catch it. My wife's excited in the background. Well, after earnings for SoFi today, which was great, somebody's catching money, I guess, but for the shareholders, it wasn't. They're sticking that money back into the ATM, or the bank is on their way to coming and gathering it back up. So I should probably make a new graphic for that. But, there's always next week, but that's how it works, and I'm okay. I'm not sad. I'm actually quite happy because we had a decent week with premium collection here. We'll get to that in a second. But before we get too far, remember to subscribe and like and turn on the notifications and all that good stuff. And an important thing is this is not financial advice. It's just me sharing what I do. And if you are inspired by it, great. If you're not, well, that's okay. But don't do anything I do. This is my money, and well, it's my wife's money too, but she doesn't know what I'm doing with it either. So she just goes along for the ride. So let's get into it and see how we did for the week. And actually, it's the end of the month, so we'll see how our monthly total turned out. Okay, so here is the week ending 1/30. So we started the week out at 1/26. So I sort this by when we close a trade. So we have the open, when we open the trade, the original expiration for the option, and then I put the date in when we close it. So these all down here are trades that are currently open, and the total profit will be determined once we close the trade and we can figure out how things turned out. So let's talk about a few of the trades we had for this week. So we started out by closing a couple TQQQ puts. At the beginning of the week, the market had gone up a little bit, which made these options worth less. And so I went to capture that profit when that happened, which I'm glad I did now. So we closed this one here, 4 contracts for 46 cents per share. So when you subtract what we sold it for, and then we bought it back, we ended up with $388. And this one down here, we originally sold this cash secured put for $232 per share. Did 4 contracts, so that'd be 400 shares at $232. And when we bought it back for $1.09, so we captured almost $500 on this one. And then something I've been doing on a weekly basis is on a cash secured put on Nvidia. So usually every Thursday I will roll this position to the following week. So I've been using the same 82 strike price pretty much for the past 2 months. And I go 1 week out, I do 5 contracts, so you need $41,000 collateral, and selling the put for anywhere from $2 to $3 per share, and waiting till the day of expiration or the day before and closing it. In this case, close 2 days before expiration. And in this particular case, we locked in $875. So let's go back and look at this one here for a minute and see what we did the previous weeks. So here's the Nvidia here, sold cash secured put, 5. This one we only did $1.20 when we sold it, but we bought it back at 29 cents, made $455. And if you look over here, this is the return on the 41,000. So we earned 1.1%. And people might think, well, that's not much. Well, this is like for 1 week. And so over a year's time, that would be 57%. So now it's starting to look better. And then come back here another week. We did another put here a couple weeks ago, 5 contracts. Sold it for $1.80, bought it back for 15 cents, and another $800 here. In this particular case, it was a 2% return on our 41,000. And if you annualize that one, that would have been 104% return for the year. Go back another week here, right here, 82, cash secured put, 5 contracts, $1.30, bought it back at 22 cents, $540, 60% return annualized, or 1.32% for this column here shows how many days we held it. So we had that for 8 days, and then go back a little more, making sure I don't miss any in here. At this point, we go back into December. I'm not going to go back to December, but I've been doing this since about the beginning of December, making anywhere from $500 to $800 a week on just Nvidia. So it's not really the Nvidia, it's the Nvidia double leverage. And I actually just put a video out about reviewing stock tickers, and I basically did the video about Nvidia, but I talked about the double leverage ETFs that I use in that video. So if you are interested in that type of thing, you can go back and look at that video. But yeah, that Nvidia has been very good to me. So what else have we done? Yen, which is the Chinese, kind of like the S&P 500 for the Chinese market. We did one cash secured put and ended up with $159. And this was the first time I ever did a trade for this one. I put myself a note, first time selling a put on yen. This one here is the Meta double leverage. I made a video on this one. I should make an update video. So I held that through the earnings for Facebook, and Facebook had excellent earnings. The price of Facebook or Meta went up like 10% overnight. And since this is double leverage, this went up 20%. So I went ahead and closed that early. The original expiration date wasn't until February 20th. So that's like 21 days from now. But I had earned almost 95% of my money. So originally I sold that for $1.90 and I bought it back for 14 cents and made $352. I'd held that for 21 days. So same thing, 6% return on my $5,600 investment, and that would have been 109% return if I did this on an annualized basis. So that was okay. So another YouTuber I follow, Danny, I don't know the name of his YouTube channel. Let me look that up real quick. So this is his channel here, and Selling Options Making Money is his channel. So he is in love with Carnival Cruise Lines. So based on that, I started watching Carnival Cruise Lines for quite a while, and it had taken a dip. So I decided to go ahead and dip my toes into Carnival Cruise Lines. It's kind of like an ocean, dip my toes into it, kind of like a cruise. So I sold just one contract at that point, 72 cents, bought it back for 22, made $50. And then we jumped down here. So I think it dipped down a little bit more. It was at 28.80, and I sold 4 contracts, got a little bit more adventurous. So 4 contracts at 55 cents, and then it went down to 21. I bought it back and made $136. Those 2 trades worked out pretty good. We'll come back to this Robinhood one here in a minute. And then we have Tesla, the double leverage Tesla. I did 2 contracts here, $1.06, bought it back for 76 cents. And I closed that today because Tesla was up quite a bit. And I just kind of feel like Tesla goes up and down. I felt like the rest of the market was kind of having a red day, but Tesla was up at this point. So I decided to go ahead and close this, kind of lock in this $60 because I wasn't sure what Tesla was going to do. But still 156% annualized return. So can't complain about that. And then we have another SoFi cover call here. Let's come back to that one too. Well, actually, let's talk about these SoFi trades here, but let's go catch this one here real quick, the Robinhood. Like a week or 2 ago, I was assigned 100 shares of Robinhood at $115 a share. This was last Thursday. Actually, trade closed early. So whoever on the other end, they exercised that option early. So I ended up with 100 shares of stock of Robinhood last Thursday, and I woke up to that. So I immediately sold a cover call with the February 20th expiration date. And then yesterday, it looks like, I forget what day it is sometimes, the price of Robinhood had gone down quite a bit. It was at $100. I was 60% in profit over just 6 days. I decided to go ahead and close that early and lock in this $248. And my assumption is that Robinhood would creep back up to a point where I could do another cover call, probably still have the February 20th expiration date, and do better than if I would have just let this ride without doing anything. Let's continue talking about that here. So down here, I went ahead and sold another cover call, collected $249 in premium on that same 100 shares, I did the same strike price of 115 in the same expiration. So really, when it was all said and done with, I probably didn't come out any further ahead, maybe just a little tiny bit. But the price of Robinhood did go from like $100 a share to 102. So I probably did do a little bit better, but I just got kind of bored and wanted to see if I can squeeze a little more juice out of that lemon there. So these four here actually, I was assigned 200 shares of SoFi a few weeks ago. So I've been selling covered calls on that. And I closed this one. I sold a cover call at 54, bought it back today for 5 cents and profit at $98. And then today, we are going to be the proud owners of how many, like 900 more shares of SoFi. So I'll have 1,100 shares of SoFi with an average price of somewhere between $29 and $25. So starting Monday, I'll be selling cover calls on SoFi somewhere around the $26 to $25 range. So what I won't do is sell cover calls for less than what I was assigned. This one here, I was assigned at $28 and my cost basis is $26.83. And what I mean by that is the premium I received, if you subtract that from the 28, I'm in these shares for $26.83. So for this particular lot of 200, I will be selling cover calls at a minimum of a $28 strike price. And the previous cover call I did was at 29. So starting Monday, I'll be selling cover calls on SoFi. I'll sell probably 2 contracts at 29 strike price, and there probably won't be a lot of premium for that one. So I'll be selling 4 contracts at a minimum of a 26 strike price, and then I'll be selling 5 contracts here with a minimum of a 25 strike price. These 2 are in a different account than these 5, and these 2 here are in a different account. So what I could do, I like to keep them separate because I don't like losing money on going from cash secured put to selling cover calls. I could figure out the average price between the 29 and the 25 here. Actually, if I just go up here, so the average here is 27. So I could just pick 27 as the strike price and sell cover calls for these 7 contracts here at 27 minimum, or maybe 28. Depends on if there's any premium to be had. And what I could do though is just wait on Monday, assuming that SoFi will bounce back. And I'm pretty sure that SoFi is going to bounce back. So I probably won't do anything Monday morning. I'll probably wait till the market opens and things kind of settle down a little bit, see where SoFi is going to kind of land in the next couple of days, and then sell cover calls because I'll get more premium then. And perhaps I could sell those cover calls like at 29, perhaps. Maybe SoFi will snap back to where it's been the last few weeks. I'll pop the chart back open here. So you see it's down here about 23. Maybe it will bounce back up here in the $27, $28 range. The 50-day moving average is right around 27. So I got the whole weekend to think about it. But the good news is, we haven't talked about the good news yet, is that if I add up this column here, for the week I collected $3,847 in premium. Actually, that's what I closed on premium. So that should be something that makes me happy, right? So for next week, I got a bunch of trades that are open. The expiration dates for most of these things I have open is not until February 20th. I got a whole bunch of stuff for February 20th. I got a couple for February 6th, which is next Friday. So there's my weekly Nvidia trade that I've been doing. If that goes down to, let's say, 25 cents, it'd be like $560 for next week for that one. Actually, if all these go to 0, let's see where I would be. Copy that down. If I highlight this column here, $1,316 in premium that I would collect or get to keep if I let all these go to 0. Very seldom do I let these go to 0. So instead of rolling these forward, I decided to let them expire. And then I decided to go ahead and do the cover calls on them starting next week because I think I'm going to do well on the way back up. So this one here that I've been doing cover calls on for the past couple weeks, I've been doing pretty good, collecting like 60% off that as it's going back up. And where's that other Robinhood one here? This cover call here, I collected 2% off that $11,500 that I have wrapped up into these shares. In other words, it doesn't really matter if you're doing cover calls or cash secured puts, you're creating premium, you're creating income, and that's what my goal is, to create income. So that's why I didn't roll these ones forward, because I would have took a big hit on the debit side and I would have came out with a credit. So I'm just kind of guessing here for this one, for example, I could have rolled this one forward and maybe rolled it forward with $100 credit. As long as I don't sell them for less than $26 a share, I won't lose any money on this. So as long as I keep selling cover calls for at least $26, I'll collect premium on the way back up. And depending on how the premiums are looking, I may keep scooting that strike price up if the premium is pretty good going back up. Now, I'm assuming that price of SoFi is going to go back up and get back to those prices that they've been at the past couple weeks. And before I make this too long, let's look at one other thing real quick. Let's look at this total profit for the month. So let's highlight all this. So for the month, we made $11,992. That's pretty good retirement income. If I scroll up here, that's from the 1st of January. I got the rolls hidden from previous to the month of January. So that was a good month. Anything I do after this will be for February. Remember, I keep track based on when I close the trade, not when I open it, as far as the profit and loss is concerned. So a few things on the horizon that I won't say concerned about, that I got to be aware of. Have 3 cash secured puts on Robinhood that are expiring on February 20th that are all about $10, or even in this case, $20 above the current price. So Robinhood is $99.48 according to this. This is after hours on Friday. So in 3 weeks, I need Robinhood to get to at least 110. So I'll have to either roll these forward or take assignment and write cover calls on them, which is okay. The only time I get sad is when I am assigned a stock and it goes low enough where I can't do cover calls and collect any premium. And then I'm just kind of hang on to the stock and not able to create any income with it. That hardly ever happens. It happened in April with TQQQ. I was assigned TQQQ, I think 3 or 4 contracts. Price went down. It was to a point where I couldn't write cover calls to make really any money for a couple weeks, but it was only for a couple weeks. It seemed like it was forever. But then when the price went back up, I started writing cover calls. Eventually, those shares got taken away above my cost basis, which was good. So I ended up doing okay, quite well with it, and everything turned out okay. I think I covered everything. I talked about how much I made this week. I talked about how much we made for the month. Talked about how much we could make off these if they all expire worthless down to 0. And we'll look at one more thing here. I have like this filter thing here. If I scroll over a little bit, it's called a slicer. And if I unhighlight some of these and click OK, it will just show the ones from this account here. So people ask me, how much do I use for trading? Well, for this one account, this is an IRA. If I highlight this column here, this is how much collateral I have tied up right now, and it's 91,000. Typically, I was keeping this around 60,000, but this Nvidia deal came up right here where I was doing a put every week on it. That kind of bumped me up above what I had been doing. I had sold some shares of something and had this cash, and I decided to do this for a while and see how much money I could make from Nvidia double leverage, just to see what I have with some of these other accounts. This one here is another IRA. First one was a Roth. This is just a traditional IRA. And my budget for this one is at 50,000 or so. Actually, I think I got about $10,000 to $15,000 in this account sitting idle right now. We'll wait and see. And 11,500 of that is actually tied up, not so much in cash, but shares of Robinhood. And let's look at the last account here, this one here. Click OK. And I have 65,000 in this account that I'm using for cash secured puts right now. And this is a taxable account. And this account, just to keep my taxes from getting messy, I try to avoid getting assigned shares in this one. So typically I keep the delta lower. Like I try to keep it at 0.25 or lower in this account to avoid getting assigned. And you can see back here, was it a week or two ago, I went ahead and had even more Robinhood. I had the opportunity to close out of that, end up with a little bit of profit and not take assignment of those. This black line changes based off I filter things. It kind of gets messed up. So I got to turn all these back on, and then my black line is back in here. And in case you don't know, the black line separates the weeks. Everything between this line and that line was the week that was ending today. Wraps it up. Quite a long video, but a lot is going on. And I tried to add a little content to answer questions as people ask questions each week about what I'm doing or how I'm doing things. So I try to throw those answers in as I'm doing this update. This is not advice. It's not any recommendations or anything like that. It's not buy alerts or anything. I just like to share what I'm doing and encourage others not to just settle for your random 8%, 10% return each year. You can squeeze a little extra money out of your account by learning how to sell options. And this is an example of how it works. So remember, if you like this type of thing, go ahead and subscribe and keep your eyes out for my next video.